Hello and welcome to the special segment known as MC Pro Select Stock of the Day. I'm your host, Nikki Mirchandani, and in this segment, like always, we bring to you fundamentally strong investment stock ideas. Today, we're going to be talking about Navneet Education. A bit about the company. It's one of the largest book publishers in the industry. The company holds a dominant position with almost 66% share in the educational markets of Maharashtra and Gujarat state board schools. Now, the company is also a significant player in the stationery business, ranking as the second largest in the sector. In a strategic move, the board of directors recently approved the demerger of its edtech businesses, reflecting a desire to focus on core strengths and emerging opportunities. Additionally, the company has attracted private equity investment in one of the sub-brands, that's K-12 Techno Services, with a substantial 22% stake. Now, why does MC Pro like Navneet Education? A couple of reasons there. Let's address the first one, which is a strong volume growth likely in the publishing division. Well, the implementation of the new education policy, that is NEP, is poised to be a key catalyst for the revenue growth in the coming financial year. As a result, the company anticipates its revenue to experience significant expansion, with expectations pointing towards growth, falling within mid-teens range for FY24. Stationery business outlook also looks pretty promising, right? The company is gearing up for expansion by diversifying its product portfolio, with plans to introduce innovative offerings that go beyond traditional paper-based products. In line with its growth strategy, the company has guided for a substantial 20% increase in revenue targets for FY24. Further, the company's dominant position in the US market positions it favorably to drive growth in export markets revenue. Let's talk about the turnaround in the INDIANNICA business, where the company's tech-based CBSE, that is Central Board of Secondary Education business, has displayed remarkable growth, showcasing its potential in the digital education sector. Recognizing the success, the company is also planning a geographical expansion to capitalize on the momentum and maximize its market share. With these strategies in place, the company is setting an optimistic outlook for its top line growth, with guidance falling in the range of around 15 to 20% for FY24. Enhanced margin profile, yet another reason for you, where the recent trend in both domestic and global paper prices have shown some amount of softening, which could positively impact the company's cost structure. As a result, the publishing segment is anticipated to achieve healthy margins, with expectations falling within the range of 33 to 35% for FY24. However, considering various factors affecting the overall business, the blended margins are projected to remain relatively stable, with range bound in the range of around 20 to 22 odd percent throughout the financial year 2024. Now, edtech business opportunities extremely large. That's another parameter driving the growth in the favor of the company, where the company is strategically positioning its tech products to play a pivotal role in driving its overall valuation, leveraging the increasing integration of digital solution in the education sector. To contain losses, the company has demerged Navneet Futuretech Limited. Furthermore, notable developments on the investment front include Kedaara Capital's acquisition of a significant minority stake in K-12 Techno Services and a partial buyout of stake in Peak Partners 2, formerly known as Sequoia Capital. The influx of fresh capital is expected to facilitate the next phase of growth for the company. Additionally, there is an anticipation of a substantial increase in the value of investment, with a projected 25% premium according to market indicators. Notably, the last deal in context was valued around 3,000 odd crore. Let's talk about valuation. Remains to be reasonable. Stock is now trading at 7 times its 1 year forward EV to EBITDA. In terms of considering the valuation, one should also be looking at the solid revenue visibility and strong ROE profile of the company. Well, these are the things that we need to watch out for. And with this, it's a wrap. Thank you so much for tuning in.